All right, let's start the last section of chapter 19. Section 3, determining how to estimate your inventory. We're going to use this using a gross profit method. Again, our section 2 talk about FIFO, LIFO, and weighted average. Now we are going to be working with the gross profit method of just estimating your inventory. I know all these numbers look, can be looking confusing or whatnot, but I'm about to jump into showing you kind of where some numbers come from. But some of these numbers are duplicated because you are just reusing the same numbers. But I'm going to walk you through it. A lot of this is going to make more sense once we actually do the work together, though. But step number 1, finding out your beginning inventory, so what you had on hand January 1st right here, plus how much you bought from January 1st to January 31st. So you bought that much in that month. So here's how much cost of merchandise available for sale. You have $184,000, almost $185,000 that you can sell. The sales for January 1 through 31st, you sold almost $100,000 in January. Previous year's gross profit percentage, we'll work with you on that. Estimated gross profit on operation, so take these two numbers times each other. So you're estimating that you had almost $40,000 of gross profit, which is nice. Step 3, your net sales. So that $99,340 you already have right up here, minus your estimated gross of operations, which is this number that you just found. Subtract the 2, and that's your estimated cost of merchandise sold. Okay. Step 4, cost of merchandise available for sale. That $184,989 right there, minus your $59,604. So if you notice a couple of these numbers you are duplicating, so you truly only need about 4 numbers to find about 8 or 9 numbers. Okay, but 4 of these numbers already, you add or you subtract. So this 184 you get by adding these 2 numbers. This one you get it by multiplication. This one by subtraction. This one by subtraction. Okay. Then right here, less. So you minus your estimated cost of merchandise sold equals our estimated ending merchandise inventory. Okay. Again, as I walk through the work together, some numbers are going to fall into place, and I'm guessing this will probably make a little bit more sense as I walk through the work together for you. So hang tight. Okay. But right here, it's talking about the net sales. You had approximately almost $100,000 in net sales. Then all these numbers get filled in from what you just found. And then these percentages right here, you take this number, so that 59,604, divided by 99,340. That equals 60%. To get this one, 39,736 divided by 99,340. Divide that equals 40, and so forth. So you take these numbers divided by the net sales to get these percentages. Okay, but I want to walk you through the work together right now, just so you guys can kind of make more sense of it. All right, I'm going to read the work together for you. Use the following information obtained from the records and management of Evans Company to estimate the cost of the ending inventory on June 30th. Okay. Estimated beginning inventory is June 1st, which is $154,800. Okay, so there's 5 numbers that are coming out of the book. Okay, so it's giving you your estimated beginning inventory of June 1st, which is your $154,800. That came straight from the book. So right there's that number. Plus the net purchases from June 1st to June 30th of 47,800. Okay, that's provided to you in the book as well. That's coming straight from your instructions. Okay, so these two numbers are given to you already. All you have to do is add them. Right, there's your 202,600. Now your net sales for June 1st through June 30th. That's provided to you in the book. That says actual net sales for June, 245,000. Right, there's that 245,000 that comes from the book. Estimated gross profit percentage of 45%. That's 45% right there. So all you have to do is take 245,000 times 45% equals your 110. Okay, so far we were given four numbers. All we had to do is calculate that one, which that's fairly easy. And all I have to do is calculate that one, and that one's fairly easy. Okay, so now net sales for June 1st through the 30th. Again, right there, it's that number. We reuse it. Subtract the estimated gross of operations, which we just found. Okay, so now bring that number down, you subtract it, and you get your $134,000. Okay, so that one's fairly easy, as long as you do that correct so far. Step 4, the cost of merchandise sold. That 202 comes all the way from right here under step 1. Minus your 134, you just found that on step 3. Subtract the 2, and now you get 67,850. Okay, so like I said, probably about 5 minutes ago, it looks confusing, but the book and on your test, I'll give you several of these numbers. Okay, so all you have to do is plug them in to the correct spot, and the rest should be fairly easy. Okay, because like I said, these two numbers were given to you. All you have to do is add up these two to get that one. These two numbers were given to you. All you have to do is add up or multiply that to get that. That one's technically given to you already. That one you found, but it's all right there. So then all you have to do is calculate that one. This one, all you had to do is find. 134 you just found. Okay, so those four numbers were provided to you, but the rest you should be able to find via simple math. Okay, so this is estimating your ending inventory using your gross profit method. Now, on the second one, prepare an income statement for the month ended June 30th. What this is going to look like, we've done an income statement, I believe, back in chapter 8. Okay, so again, here's what an income statement looks like. Let's see. Your net sales. Right here's your net sales. Net sales for June 1st through June 30th, $245,000. Here's where that $245,000 comes from. That's your net sales. Again, this is for the month of June. So what sales did you have in the month of June? Your net sales June 1 through June 30th. Okay, so that's where that number comes from. That's your operating revenue. That's how much you brought in. Keep in mind you have your two columns. Your two columns, your first one represents some sort of calculation. So if you have two numbers you need to add or subtract, that's why you use this first column. The second column is kind of like your subtotal or your balance kind of deal. Okay, so net sales, I didn't have 2 or 3 numbers to add up, so that's why I threw 245 in the middle, because that's your subtotal for your sales. My cost of merchandise sold. Estimated beginning inventory of June 1st. Here is beginning inventory of June 1st, way up here in step 1 of 154.8. Bring that 154.8 down, and then your net purchases of 47.8. Here's your net purchases for June 1 through June 30th of 47.8. So 47.8, bring that down here. Here's your merchandise available for sale. Okay, so right now you have 202,600 or $202,600 dollars of merchandise that is available for sale right there. However, we added these two up. Okay, got a little subtotal, but then now we're not done with it yet. That's why it's still in this first column, because we still now have to subtract from it. Okay, so these two numbers added up is your 2026. Now we want to subtract the ending inventory of June 30th, which is your 67,850. So right here's your estimated ending merchandise inventory of 67,850. Right there is that 67,850. Well, now that we are done with these numbers, we need to kind of find your subtotal. So 2026 minus your 67,850, that is where that 134 comes into play. Which also, you can find that estimated cost of merchandise sold. That's your, that is your cost of merchandise sold there. Okay. Your gross profit on operations, your 110,250. Right here is your estimated gross profit on operations right here under step 3. And you also have that's what you found in step 2. That 110,250, 110,250 shows up again. Okay. Your operating expenses is your 76,930. That one is actually given to you in the book as well. So if you look on page 576, that's your last number that's given to you. That's 76,930. Okay, so that 134 minus, that your 134 equals that. Your 110 minus your 76 is your 33. Let me double check. Okay, so now you have these numbers, 33,320. Once you got that all figured out, now we need to figure out our percentages. Okay, so for our percentages, all you have to do is take these four numbers, take 134,750 divided by 245. That equals your, and then you got to take that times 100 to get that into percent, because you got 0.55. So now take that by 100, and then you get 55%. Take 110,250 divided by 245. That equals 0.45. Take that by 100, and you get 45%. Again, take your 76,930 divided by 245. Take it, then you get 0.314. Take it by times 100, and you get your 31.4%. Then 320 divided by 245. That equals 0.136. Take it times 100. That equals your 13.6. Okay, so here is the bottom part of the work together. Here's your income statement. Like I said, this part, four numbers are given to you. You use a couple of those numbers again, but then the rest you calculate, which should be fairly easy. Down here, all you do is bring a couple of these numbers that you just found down. Then this one came from the book, and then you are able to finish that up. Okay. If you have any questions, again, feel free to reach out to me. But if you are good to go, right there is all 3 videos of chapter 19. Okay. Enjoy the rest of your day.